Hey everybody, sorry it's been so long since I gotten a video out. Hopefully it's worth it for you. We'll get sort of a big picture, full scope look at Bitcoin and alts in the market and stuff like that. So we'll just go ahead and dive right into it. So we're looking at the daily chart of Bitcoin. Um, Essentially, the way that I use to determine my directional bias is looking at how pivot points are breaking previous places of market structure. So to define a a bullish trend, you need to have like a lightning bolt move. So we'll have like our bottom pivot here going up, making a new pivot which is a higher low than our previous low, and then you want to break. Oh god, you want to break your previous high. So this 1, 2, 3, 4 move breaking previous high with this close and setting a higher low with this close gives you this 1, 2, 3, 4 move, and that would give us a bullish bias and a bullish trend. Now, what we were watching previously was when we had our pivot from here down, we broke this previous low. So that puts us into like a bullish consolidation pattern. We establish a new high up here that's lower than our previous high, and then we've closed below this previous low. So this 1, 2, 3, 4 move gives us, well, technically from here on this day on the 15th, that established a bearish trend and a bearish directional bias because we've established a lower high than our previous high and a lower low than our previous low. So since the 15th of May, I was operating with a bearish bias. What we're going to want to do is to essentially establish a new set of higher highs, higher lows, and at that point we can start considering a bullish bias if we can make the same sort of move to the upside. But I wouldn't be too bullish in all of that until we can cross over this previous high. So everything, if we establish a new 1, 2, 3, 4 move, then I'll be cautiously long, but I won't be really all into my long trades until we can establish a close above that 58,862 point. And that's sort of how I would be using the charts here for my directional bias. Another moving average that I've seen some commentary on lately is the 200-day SMA. And I want to sort of talk about that for a second. At the time, the comment was about Bitcoin trading above, well, the crash had happened, but at the time, Bitcoin's trading above the 200-day SMA. And they were still very bullish on their positions and advising, holding and stuff like that. Not that I'm advising you should close your positions, but I thought it brought up an interesting point to consider about moving averages and price action. After their comment about still being bullish and holding their positions, they stated that they were expecting, weeks to months of choppy price action due to the severity of the pullback and the length of time that Bitcoin had been bearish. And that brought up like an interesting thing to me that I felt like was being missed in the analysis. And that's involving like how price action or how moving averages lag price. So the 200-day SMA is a calculation of all the closes of the past 200 bars. So right now, the 200-day SMA is plotting right here, and it's adding in and averaging all of this bullish price action. So trading below it, well, excuse me. most of this price, like most of the calculations for the 200-day SMA are mostly bullish action from like here all the way back there. So this is going to be content like one thing about price action, like moving averages lag price. So you need to consider, like when you're thinking about future price action or not future price action, when you're thinking about moving averages into the future, then you need to consider more recent price action. So the comment that they were making was being bullish, um, and also adding in expecting choppy price action. So if you have a volatile choppy price action and not bullish price action, then by the time the moving average catches up to price, you'll see something like this, where the moving average is still it's still calculating bullish price action from the past, and then once it gets to around here, then it starts averaging in more of this correction price action. So if there's bearish or choppy price action in the meantime, then by the time the moving average catches up to where price was at this point, then price will be well below the 200-day moving average, and it will be acting as resistance. And that's not really a great setup for for Bitcoin. So something just considering price action and moving averages in the 200-day simple moving average, I would hope that Bitcoin can trade above the 200-day SMA for a little while instead of just being choppy price action, because we could very easily see something where the 200-day SMA, trades above price and is acting as a bearish force against price. So hopefully that doesn't come to pass, and I hope that makes sense to everybody. Dropping down from the daily chart into the 8-hour chart, we'll get sort of a midterm picture of Bitcoin. You can see how over the last few weeks we've been trading around the 50-day EMA, seeing if it'll act as support or if it'll fail. And then on May 12th, once we failed, we've just been in a steady decline since then. But the promising thing about this decline has been divergence. This is a CCI. Back on the 12th, we set a new low. And then since then, we've had lower lows in price, but the oscillator CCI has been trading upwards, or has been trending upwards. So we've set continually lower lows in price, but not lower lows on the CCI oscillator, the commodity channel index. That's one of the five price action oscillators I like to use for divergence. You have momentum, CCI, MACD, and a blended one. But the fact that we have like bullish divergence, that's a really good setup for future price action. And on top of this midterm picture, adding in cycle analysis, the 40-day cycle, which is 20 days of bullish price action, 20 days of bearish price action, and the 103-day cycle of Bitcoin, 51 and a half days bullish, 51 and a half days bearish. This is a very common repeating cycle. The jagged line is the daily chart of Bitcoin, the daily close of Bitcoin, and the wavy line is a forecasted model of these two combined price cycles. The cycle highs will align to a specific date, not to a specific price. But you can see how like these two cycles have matched very well with price. Like you have a cycle high, cycle low matching with here, a cycle high matching a high in price, and a cycle low matching with this low decrease in price. This is the one, like this large cycle here is 103-day cycle, and we're approaching this cycle bottom. So when I'm looking at cycle analysis charts, that's when I'm also like, once price action is getting somewhere near one of these cycle lows, then I'll be looking at a higher time frame chart, either the 8-hour or the daily or the 12-hour, for some bullish divergence setup. Because this model is like giving me like a basic framework of what price might be doing, and then these indicators will be giving me a technical like signal for, you know, what's happening there. So this is really good for future price action because it's lining up with a potential cycle bottom. So given a trigger on this indicator, I would be expecting price action to be bullish well into, you know, late June, until I see like a sort of, I'll be starting to look for a retracement into early July. But this is also the beginning of like a 103-day cycle. So we can have 50 days of bullish price action potentially. Yeah, so that's sort of a midterm picture on Bitcoin. Moving more into a smaller term, short-term time frame, we'll go down to the 4-hour and the 1-hour. 4-hour, I have two EMAs on here. I have the 50-day EMA and I have the 50-period EMA. We're on the 4-hour chart, so each period is 4 hours. We have a pretty good descending, like, I mean, we're obviously in a bearish, we're in a bearish trend, and we have like a new trend line. You could have started it from back here, but we have a trend line, a descending trend line that we're working against, essentially mentally. Also, since the time on the 12th of that crash, we've been trading under the midline of the RSIs. RSI set to like its stock values, but trading essentially 50, the midline here, anything below the 50 midline will be bearish price action. 50 and above would be bullish price action. And a lot of times I'll use and view the 50 line as like a support and resistance zone. Like you can see where it's hit the 50, kind of tested it, come off, hit the 50, tested, come off, hit the 50, failed, hit the 50, you know, resistance, failed. So this bouncing in between here will just be continually bullish, or excuse me, continually bearish price action. And this is just not a promising look for the short term. It's the same thing with the 1 hour. We have that same descending trend line that we're battling against. Here's the 50-day EMA and the 50-period EMA. So this is each period being, you know, 1 hour, because we're on the 1 hour chart. So we're trading below it, and it's acting as resistance for all these short positions, trading below, hitting, trading below, hitting, testing, testing. But then we have this ascending trend line we're working against, and it fails. So we're probably going to have some more price action coming to trade up and hit the 50 period EMA again. And again, you can see how we have bearish price action under excuse me, under the 50 midline, and also this breach above the 50, the midline, also kind of coincides with our test of the EMA. Fails. Above the 50 is another test, fails. Here we go, above the 50, another test, fail. So essentially, if we get, you know, RSI up to 50, it should align with some more price action around the 50 period EMA. This section right here is interesting, as we have essentially, we're starting a trend line, you know, of lows up. So we could ascend like around, you know, the 22nd in the evening. We could have like some sort of pinching of price action in between this trend line of lows and this trend line of highs. So we could have some volatile price action, you know, on the end of the day of the 22nd. That could be something interesting. Hopefully it's price action up to the top, but, you know, we'll just have to see. But those sort of things that you would kind of look at to be we'll go there, to be some point of interest. Like in here, in this range, something is going to have to happen with price. So either volatile price action up or volatile price action down. So that's something to sort of keep in your calendar. Moving on to some neat macro stuff. Let's look at Bitcoin dominance. Bitcoin dominance is the amount of money in Bitcoin contrary to the entire rest of the marketplace. Since January, early January, money was flowing into Bitcoin, peaked out when Bitcoin controlled 72% of the entire market cap. And then it just flowed all the way into altcoins. So there's essentially been like a fantastic rally in altcoins all the way up until here. And this is an interesting period in mid-May because we have a lower low in dominance, but a higher low on the RSI. So we have a bullish divergence in dominance. Since you're not measuring price action specifically, you could take this with a grain of salt, but it does test generally well. So this bearish divergence lines up with an increase in Bitcoin dominance. So potentially we can have, Bitcoin increasing up to this 50 range. So alts may bleed a little bit as Bitcoin, continues its rally. And that sort of makes sense. Like in a really, really bad market crash, like people are escaping from all their positions and moving into something safe. Either just getting out of alts to BTC or getting out of alts to fiat or BTC to fiat. And once you have Bitcoin like showing stability, then usually people will enter into Bitcoin first, and then from there they will flow out into other coins and stuff like that. So this is kind of a neat indication right here of this bullish divergence, the increase in Bitcoin dominance lining up with this crash and people exiting out of alts. So maybe we have a Bitcoin rally. Like this would signal a Bitcoin rally, and then potentially look for some sort of stall out in dominance once Bitcoin gets to around the 50 mark. Like if by June or mid-June Bitcoin is up to 50% dominance, like maybe it will stall out, and at that point in time that would lead to money leaving Bitcoin and going into other alts. So that's one sort of new thing. So keep that in mind. A June-ish altcoin rally, and that'll tie into some other stuff in just a second. So the relationship that's really interesting is from Bitcoin dominance to Ethereum versus BTC. So you can see that the rally of Bitcoin dominance coincides with the failure of Ethereum versus Bitcoin. So this is Ethereum, like when this chart goes down, this is Ethereum selling back into Bitcoin. So you can see also that we have a support line around there. You have a peak here that it broke above and is coming back down to test, which is also lining up with the midline of the RSI. So potentially we can have like a bounce off of the midline of the RSI and a bounce off of this support here, or we could have breakdown further from the support line and we'll be entering bearish territory on the RSI. Now, if this happens, then that also would coincide with Bitcoin dominance coming up and testing around the 50% of dominance, and also it'll be entering into bullish territory on the RSI. So it's like a really neat relationship. Then on top of that, this is the cycle of Ethereum to BTC. So the chart of Ethereum to BTC, if you remember, like we are at this point here and trending down. This is a weekly picture of Ethereum versus BTC. The weekly cycle is 52 weeks excuse me, God, this is a 52-week cycle that has been the most prevalent on Ethereum versus BTC. The cycle is peaking, and it's expecting a cyclical downtrend in towards the end of the year. So that lines up really well with the peak here and a failure there and oh God, so many things. And an increase here. Like all these things are really lining up well together. A cyclical peak into a cyclical downtrend with a bullish divergence on Bitcoin dominance, an increase into that, and a failure of Ethereum versus BTC. The last part of this whole cycle is looking at altcoin dominance. Others.d is every coin except for Bitcoin. So the market cap of everything minus Bitcoin. And matching inversely Bitcoin dominance, you have in an increase from January where all the money is leaving Bitcoin and flowing into altcoins. And what's interesting here is this peak here and this peak on RSI. So RSI measuring altcoin dominance, we have a new high on the dominance, but not a new high on the RSI. Back here, these peaks matched in highs, but RSI has decreased since then. So we have a bearish divergence forming on the altcoin dominance, indicating a downtrend. Also, the cycle of altcoin dominance is a 41-week cycle, which peaks in May and continues to have a downtrend in September. So putting everything together, bearish divergence on altcoins, indicating a potential downtrend, cycles of altcoin dominance indicating a peak and potential downtrend, Ethereum at a peak indicating a potential downtrend, Bitcoin in a downtrend and indicating a potential uptrend. All these things really point towards a potential rally in Bitcoin. So that's really a positive sign. Although there is one interesting caveat. So the last part for this, let's say that we have a bullish rally on Bitcoin. We'll go to the weekly chart. Let's say we have a bullish rally over the next 4 months. So May, June, July, and August. Let's say we have price action doing this sort of thing. If we don't end up crossing above and closing above this previous structure high right there before the downtrend starts, then at this point we'll have set a double top. Like we'll have had a macro higher high and a macro lower high, and we'll be starting this descending trend line. At that point in time, it'll be really hard to argue that we are still in a bull market. So that's something that personally I'm hoping for, a close at some point in time, establishing a new all-time high. Because if we don't have something like that in 4 months, then the argument of being in a bull market becomes really hard to make. But yeah, so that's something that I thought was pretty interesting. But in the short term, we can still make trades. Places that I think are interesting, like you can look for buy zones in there. Oh my God, I hate this. Buy zones in there, and sell zones around this range. Like those are areas of value, and hopefully we continue to stay either above or inside this range. Once we get to the breaking point right here, potentially we'll move forward, but there's also, potential to the downside. At the very least, we have this low as support. But yeah, playing inside this consolidation range is probably fine. Buying to the low side here, selling to the top side here, and getting to critical mass around the 22nd of May, where some sort of price action will have to be forced. But yeah, that's pretty much the entire entire look at Bitcoin. Hope it's been informative for you.